Welcome to Echo Trade. Today we're here with Joe Hosler again. Joe, appreciate you being here. How's it going?
Great. Thank you for having me.
Yeah, glad to have you. So Joe is one of the founders and managing principals of Auour Investments. I think they're coming up on their 10-year anniversary. Prior to that, previous life, Joe and the rest of the team were institutional money managers for about 20 years. For Joe, managing, I think individually you were managing about $2 billion in assets. The rest of the team, kind of collectively in different, companies, managing about 10 billion between them. I think now Auour has about $500 million or more in assets that you guys are managing and people are entrusting you with. But today we're talking about the social responsible global equity portfolio that's available in Echo Trade. So we'd love to kind of learn more about you. If you can give me, I always like to start and give you the opportunity to kind of give just an overall thesis, what the goal of the strategy is, what we're trying to accomplish within the portfolio.
So thank you for having me. So the socially responsible equity portfolio, global equity portfolio, kind of blends two different perspectives for us, or two different elements. One is the core to our whole business is downside mitigation strategies. So we look to avoid major market downturns by moving into levels of defensiveness, typically cash, before the volatility happens. And to do that in an analytical approach, which we can get into if you like to. And then we marry that with a socially responsible aspect. So we're trying to utilize, and we're an ETF, we utilize ETFs for all of our investment strategies.
Yeah.
And the amount of innovation that's occurred within the ETF space around socially responsible investing has been dynamic, has been great for us, because we just we essentially blend the social responsible aspects that we care about into our risk mitigation strategy, and to come up with the social responsible global equity. So the type of social responsibility that we're doing is focused around the core being more activist rather than passive. So instead of avoiding certain strategy or certain types of elements that are considered not socially responsible, we try to focus much more of our time on being in those strategies that, through a social responsible lens, have produced better returns over time.
Yeah.
And so being more active in that aspect rather than a more pessimistic view of certain elements.
Gotcha. Okay. So how do you identify then, because again, to take a step back, so this portfolio really is, looking at the market in the very similar way as the downside mitigation global equity portfolio, but with the socially responsible aspect to it. So with that in mind, how do you guys actually, kind of quantify or identify what a socially responsible company is, or what ETFs can be defined as socially responsible?
Well, so let's take, there's two examples that I would highlight, and they're growing every day. So we're constantly looking for new avenues for this.
Yeah.
But let's take, there's an ETF done by State Street called, where the ticker is SHE. And it's built off of this premise that is well researched, that companies that have more equality, gender equality within the board and executive management team, those companies typically outperform those that aren't as don't show as the same level of equality.
Yeah.
So we focus on our S&P 500, our large U.S. Exposure. We focus that on SHE for the most part. It's a way to promote a socially responsible context, but to do so through proven ways of getting a better return. So we're not focused on just avoiding things because they're bad. We want things that actually help grow the economy and produce a better outcome for everyone. So that's one aspect. The other one is for our emerging markets. We use it's the Freedom Index. It's FRDM, and for emerging markets, it's interesting for us because for social responsible investing, freedom has never been taken into account for most social responsible emerging market funds. So for us, it was this idea of, well, it's hard to be socially responsible if you're imprisoning people or you're dictators. So this ETF came out that's focused on a different type of social responsible in my mind. It's one based off of freedom. So its index is weighted by freedom of all of these emerging countries, and then that's the way that we invest. So it's promoting company or countries that actually endorse and protect freedoms, intellectual freedoms, personal rights, whatever it might be.
Yeah.
Those are two aspects of how we can actually move a social responsible element into our downside mitigation core strategies.
Gotcha. That's interesting. So then a little bit more on the process, and we can kind of dive into, the actual investment process and the analysis and your quantitative models, which are very interesting. But within that, so are you basically kind of looking at a universe of ETFs that fit the social responsible parameters, and
Yes.
then kind of putting those through your analysis to determine what actually is going to, not from a socially responsible standpoint, because you're doing that filter first.
Right.
And then the second filter is, okay, within this universe of socially responsible ETFs, what is actually going to, depending on how we're looking at the market in this given moment, where you're going to allocate your funds to.
Well, yeah, I'd flip it around potentially. So what we're doing first is we want to identify the risk appetite within the market.
Yeah.
If the risk appetite is strong, we want to be fully invested, and there's aspects of the markets that we want to be weighted or tilted towards.
Uh-huh.
So typically, the higher risk elements of the market outperform in good times. So the emerging markets, small companies, international over US.
Yeah.
However, when we measure that, when we think that risk is not going to be paid for or compensated, and we want to become more defensive, you move out of those categories and you move into large cash generative US companies or
Gotcha.
cash.
Yeah.
So that's the most risk averse is when we can move into cash. So we do that risk analysis first. So it's a risk intelligent core. But then once we know what kind of regime we're in, we call it regime based investing, is understanding the different changes of risk within a investment cycle.
Yeah.
As we start to see a change in the risk appetite, we typically know the factors that we want to, or the asset classes that we want to invest in. Once we know what we want to invest in, what our overarching asset classes we want to be in, we will then use the social responsible screen on top of that. So that's where if we
Gotcha.
wanted emerging markets, we will move into this freedom indexed emerging markets fund. But we might not always be in emerging markets. We may want to, in times of predictive risk or volatility, we'll move out of those higher risk elements like emerging markets and move into
Uh-huh.
safer zones. So our social responsible context will not swing how much risk we're willing to put in the portfolio. So it's
Yeah.
meant to be a core portfolio, core equity portfolio for people that have a social responsible tilt to them.
Got it. So to use your examples of the different emerging markets that you would invest in versus, the the SEG ETF, you could be in lower risk environments where, like, you guys would look at the emerging markets as providing more value and more growth. Then you'd be focused on those areas. But just because you want to support those countries and those equities, you're not going to necessarily only be invested in them. So you see, in a higher risk environment, you're going to pull out of that and maybe invest in the U.S. larger, companies that are falling under that
That
SHE.
virtual context.
Yeah.
Yeah,
Gotcha.
for us, it's about there's a desire to do good, no,
Yeah.
most definitely. But one of the best ways to do good is not to lose people's money.
Exactly.
So for us, it's about principal protection. And then once we're in the markets, that provides us luxury of identifying good companies versus bad companies.
Yeah.
But first and foremost, we need to work on protecting principal in times of duress.
Got it. And then, so finally, I mean, you mentioned this is, you look at this as, as a core portfolio with a socially responsible tilt to it. So, I mean, you are invested in all of your own strategies, you and the rest of the team. So can you talk a little bit more about that, on how that might fit into, how you're looking at it as in part of your portfolio, and what kind of a core, portion of your broader portfolio might look like?
Yeah, so I mean, as it depends on the person. My
Mhm.
spouse, my wife, is more socially responsible than is tilted that way.
Yeah.
And so she, within her portfolios, we utilize the social responsible portfolio for her equity component.
Yeah.
So it depends. I mean, and then I also own some because we, it's I guess I should have started off with this. The name Auour Investments, it's spelled Auour, but it's pronounced Auour.
Yeah.
And one of the reasons that we chose that name is because the three founders, all of our assets are invested in our strategies. We feel
Hmm.
like it's very important for us to be aligned as much as possible with our client base. And so, yes, I'll hold all of our strategies. In the case of social responsible, it's a segment of my core. It's not all of my core.
Got it. No, that's perfect. And I never knew that about Auour and the reasoning behind that, but I love it now. It took me a while to understand how to pronounce it, but now it really makes sense. I love the concept. But
Yeah,
again,
I started the name, or I made up the name, so it's my fault for the complexities around it.
but when you understand it, it's fantastic. I love it. So it's great. But hey, Joe, it's been a great partner for a long time. We're excited for years to come, and appreciate investors can take a look at the social responsible global equity portfolio. They can copy the trades, copy Joe within EchoTrade. Thanks, Joe.
Thank you.